Let's start off with an update on what you're making of the movement we're seeing on the NSE. We had the markets pretty hard hit yesterday.
That's right, Alishia. Good morning and thank you for having me. As you've noted, yesterday the Nigerian equity markets closed lower, sharply lower as well, as we saw the all-share index shed about 327 points to fall to a level about 21,055 points. In fact, over the last quarter, I think we've seen the NSE all-share index sort of pretty much flat or trading in the tight range between 21,000 and 23,000 points. We think there's a great possibility that that's likely to continue towards the end of the year. In yesterday's trading, we saw volumes spike by about 56% to around 429 million shares traded. Even though these levels was an increase, day over day, we still think it's not very indicative of a sustained or a renewed interest in the Nigerian equity markets. Our outlook going forward is that the market is likely to continue to be in limbo, and especially taking into account the historic sort of trend of the market, especially around this time of the season where you see a lot of people cashing or sort of selling shares in preparation of the festive season. However, in the first half of 2010, we think that there's likely that it's possible that there might be some renewed attention to the equity markets.
Keeping some investors busy are a few of the results which we're still seeing trickling in. Yesterday, Consolidated Hallmark Insurance reported third quarter results ended the 30th of September, and results reflected that we saw a gross premium increasing 76.8%. Profit after tax, however, fell back 11.7%. Walk us through those numbers and let's discuss the valuations of this company.
Right. Consolidated Hallmark Insurance reported third quarter results for the year, for the period ended 30th September 2009. The results show that gross premiums increased by approximately 76.8% to around 3.4 billion naira mark. Profit after tax, however, fell surprisingly by about 13% to about 547 million. And the primary reason for this was because of taxes. I think the company, it's not clear to us because they haven't released the full audited results, but I think the company must have deferred some tax from the prior year, from the prior period into this year, and so recognized it in this quarter, and that's subsequently accounted for the lower PAT. In terms of valuation, however, we're forecasting a calendarized 09 EPS of about 14 kobo, and so at the current price of about 50 kobo, that translates into a PE multiple of about 3.5x for 2009. At a 25% growth rate, that translates into about a PE multiple of about 2.8x. And you have the broader industry, the broader insurance industry trading at multiples of about 7.5 and 6.8 for 09 and 2010 respectively. And so, it appears that Consolidated Hallmark, it's, relatively cheap. It's cheap relative to its peers. And so we think that there's possibility for upward expansion in terms of the multiples.
In the meantime, over in the banking sector, we saw Nigeria's Securities and Exchange Commission concluding arrangements to summon recently dismissed banks executives to ascertain their connection with various capital market infractions. Give us an update on that front, and what are some of the expectations that the market holds when it comes to news out of the banking sector pertaining specifically to the fallen 10?
That's right. That's a very good question, Alishia. Yeah, the Securities and Exchange Commission reported that it's perfected arrangements to summon various bank MDs that were sacked during this transition with the new CBN governor to basically answer a number of questions or allegations with regards to market infractions. I mean, we think that's obviously potentially good for the market. I think that to the extent that the SEC can ascertain what roles various individuals played in this crisis, it's ultimately very good for the market. We think it's very important, very crucial, however, that the SEC does this in a very coordinated, structured, and timely manner. I think a lot of time has been spent enough on this crisis, and we want to be able to turn the page and restore investor confidence in the securities market here in Nigeria. And in order to do that, the SEC needs to do this in a very timely manner. It's also important for the SEC to understand its primary responsibility of regulatory, which is a regulatory function of the securities market here in Nigeria. What were some of the regulatory oversights which ultimately brought us into this crisis in the first place? And I think that will be a very good starting point, for the SEC, to prevent such things from happening in the future.
What are you making of the movement we're seeing in the banking sector, TK? Because while overall it certainly does seem positive, this doesn't seem to be broad-based activity that we're seeing in the sector. It's very selective investor interest that seems to be at play.
Well, I think you're right. I mean, it's, all banks erred in judgment with regards to this crisis, but various banks, were at different levels in terms of their judgment. And so that's why, in essence, we've with Sanusi, we've basically, see a banking sector that has sort of been divided into two. You have banks that are sort of labeled, good, by the CBN, and banks that are, sort of labeled as a going concern. And so, naturally, as an investor, basically, banks that have been labeled good are going to be attracting the rich valuations and essentially going to be open for the new business. Whereas, new management in place at the, banks whose MDs were dismissed, are sort of going to be working through the majority of the issues, that are sort of anchoring recovery in the equity markets. I think, basically, Sanusi must have applied some judgment in terms of deciding, okay, who are the worst ones? And how do we help them resolve some of this crisis? And so I think that's what you're seeing play out in the banking sector.